Alright, today is Saturday, April 13th. I hope everyone is having a fantastic weekend so far. The weather is really getting better in Canada, especially where I live in Toronto. It's usually very, very cold. So finally, we have a little bit of spring. And I'd like to use this chance just to show you a little bit of a sample of our Toonie webinar, because I understand a lot of people are still basically sitting on the sideline. Maybe you're not quite sure how the webinar is going to help you. So I'm just going to show you exactly what we have done for this week, Monday to Friday, and show you the trades that I recommended and also the trades that I personally took. Now, I want to show you everything very honestly, completely. Okay, that means just like every other trader, I have a lot of losses. Okay, I'm not here to tell you how good I am. No, I'm just here to basically give you the knowledge that I have acquired for myself for the past decade. And hopefully you can learn something from it, from this kind of Toonie webinar. Again, the webinar will be hosted every Monday to Friday prior London session. So an hour before London session is where I will run this Toonie webinar. I call it Toonie webinar because it costs $2. Toonie is what we call $2 in Canada. So every webinar will cost you $2. It's the price of a cup of coffee. So it's actually cheaper than a cup of coffee nowadays if you get it from Starbucks. Unfortunately, coffee become very expensive. Okay, so if you want to learn, definitely I would encourage you to at least try out. The only thing you're gonna lose is your $2, but you're gonna learn a lot of knowledge. So, what have we done this week? So this week, starting from Monday, I took a New Zealand dollar trade. Now, first of all, starting from Monday, because we entered the market April 8 with not much going on, as I mentioned, we didn't have much economic calendar for this week, especially for Monday and Tuesday. So there weren't much going on for me to basically see the direction of the market. So I simply go with the previous fact in the market, and I simply trade the fundamentals. Now, if you trade the fundamentals of everything, normally you want to have a longer time frame, because if you trade in the fundamental fact with a shorter time frame, you might be right in a long trend, but you might get stopped out in a short-term trend, and that's exactly what happened to me. So for Monday, I recommend long US dollar. Now my thinking pattern is that although a lot of traders were negative about the US dollar because Federal Reserve came out previous meetings saying that in 2019 they might not raise interest rate. They are basically in a wait and see mode, and we also have a speculation that they might cut interest rate this year. Because of that, a lot of dollar long trades traders were unwinding their positions. We actually saw a lot of dollar negativities. But for my thinking pattern is that regardless of that, if you take a look at the interest rate right now for the currency, you see that US dollar is still the highest interest rate among all the other major currencies. Now on top of that, all the current major economic data, GDP, inflation, and employment, US is still the strongest economy out of all the other countries. So I'm personally still very bullish on the US dollar, at least in the medium term. Now if you take a look at dollar index, just give me 1 second, I think it's right. I think it's here. If you take a look at DAX, DXY, this is basically the dollar index. Okay, and you see that we are still, this is a daily chart, we are still in a very nice uptrend since we hit the bottom of 2018, and we just keep going up, along with the interest rate and bond yield in the US dollar. So right now, if you any of you know the technical pattern, it does seem like we are having a little bit triangle, and we might break out this 97.73 anytime soon. But for that being said, that's a daily chart. For intraday trading, you still have a lot of down day, and then for this week, it's obviously not that good for dollar. We can see that from Monday we have a red bearish engulfing candle, and all the way we actually closed lower for the US dollar. Now, of course, it's always easier to look back at the market in hindsight. But at the beginning of the market, what I see was this green candle right here, and that alone, of course, was not the reason I'm bullish in US dollar. As I mentioned, bullish in US dollar because fundamentally they are very strong. Sentimentally, although the Federal Reserve came out and put down the US dollar long traders, but in comparison to the other major currency, it is still a very strong currency. So because of that, on April 8th, Monday, I was long US dollar. Now, why did I short New Zealand dollar? Well, at that time, my thinking pattern was that previous week, RBNZ actually had a meeting. Now, although they didn't cut interest rate, but the government came out and had a very dovish talk. And whenever you have a very dovish talk from the central bank, it is a very good catalyst for you to short that currency. Now, on top of that, if you take a look at futures market, we see a lot of high probability to speculate RBNZ to cut interest rate in their next meeting. That means the soonest for 2019, we might see New Zealand dollar cutting their interest rate. And it actually makes sense because for Federal Reserve and Bank of Canada, they are all very consistent with their approach. And they also have a quite strong economic data to support hiking of the interest rate. Where in New Zealand, you don't really have that much going on. New Zealand is not doing so well in their labor market, in their GDP or inflation. The biggest sector in the New Zealand, of course, is the natural resources and also the tourism. But aside from that, there's really not much going on. And so there's no reason for New Zealand dollar to give out such a high interest rate in compared to the other currencies. And if you take a look at New Zealand dollar, previously you see this huge drop, right? And all the way until last week. If I zoom out, you see it's a very nice downtrend ever since they had the meeting last week. Okay, so ever since we enter into April, basically it's a very steady downtrend. So that's why I pick New Zealand dollar versus US dollar, because we have a fundamental bias, we have a sentimental bias, and the chart was looking quite nicely for Monday. So I enter this trade just slightly at the PV, below the PV level. So basically, right at the opening, I just enter it. Now, of course, you know what happened this week. New Zealand dollar reverse and stop us out. Now, this week particularly is a very weak week for US dollar, and we also have a quite strong week for the equity market. So what we see is that we saw we saw a quite nice uptrend in equity market for the European market and the US market. So that alone pushed a very strong risk on sentiment, which helped New Zealand dollar, Australian dollar, and Canadian dollar. So basically, our Monday trade call New Zealand dollar short was a loss for me personally. Now I also give our other trade call on Monday as well, and some of them actually was not that bad. So personally, I took New Zealand dollar short, and I was also giving out trade code for New Zealand yen short, New Zealand Swiss, and Aussie dollar. But I think, honestly, if you have taken New Zealand yen short, you would get stop out as well. Okay, it's just It's just a very strong risk on sentiment week for uh, for the market, and that will always help New Zealand dollar and Australian dollar. So that was my trade call for Monday. You see how strong it is that we finished the week with such a strong uptrend for New Zealand dollar. On Tuesday, I gave out a trade code for Aussie New Zealand. Okay, now I'm personally still in this trade right here. So that was April 9th. So April 9th, as you can probably tell, I'm still bearish on the New Zealand dollar regardless of what happened. So on April 9th, I still want to show New Zealand dollar, but because I started to realize that the market, we might have a strong risk on sentiment for this week, and I definitely don't want to go against it. Okay, this is an interesting part about trading, is that you not only you need a fundamental knowledge, you also need to understand the market sentiment, and then you combine everything into the technical analysis. I personally think that's a whole picture that you can really be confident about your trading. Because if you only have one of the three, yes, you could still make money from time to time. And don't get me wrong, a lot of traders are very good at technical analysis or the fundamental analysis, and they still make a lot of money. It's just not for me. For me, I really want to know at least a little bit knowledge about the three aspects in the market. And it's not because that will give me a better chance, it just gives me a better confidence to hold on to my trade. Because at the end of the day, trading is about your psychology. So if you're able to hold on to the trade and be confident about the trade you take, and the more knowledge you have, the more confident you get. So that's why for me, I always like to at least have the three element in line for me to take any trade. So on Tuesday, I'm still quite bearish on New Zealand, and the reason is, as I mentioned, they have a very dovish central bank, they have a very weak economy, and yet they have a very high interest rate. That means they have the most room to cut their interest rate. You see, that's how central bank can basically manipulate. I shouldn't say manipulate. Should help the economy to go up or could go down, because it's really depend on how much room they can maneuver. So if you have a central bank like US back then, they're almost at 0% interest rate, and people start getting nervous because how low can you go? You have to go to negative, right? And that's what happened to Swiss franc and Japanese yen. The interest rate are negative. So basically, if you are a commercial bank, you have a lot of reserve, you are losing money every day by not lending out your money. Right? This is sort of a way the government want to force you to lend out the money, stimulate the economy. Okay, so if you look at New Zealand, 1.75, they still have a lot of room to cut at least 0.25% interest rate, and that's what the market expected. So I'm still quite bearish in New Zealand, but I don't want to go with US dollar. I also don't want to go with other risk sentiment, risk of currencies. So my thinking pattern was that I want to find something that is less affected by the risk sentiment, and that's why I pick Aussie New Zealand, because Australian dollar and New Zealand dollar are basically in the same bracket in terms of risk sentiment. So if we have a very strong risk on sentiment, both Australian dollar and New Zealand dollar is going to be benefit. Vice versa, if we have a very negative, very bearish market in the equity market, in the stock market, then both Australian dollar and New Zealand dollar is going to be affected. So I picked this trade, and I actually placed my trade, I think at April, at the end of April, beginning of April 9th, so right at the New York station. So I placed this trade, and as you can see, I did not get filled at all. That was my line, right? I did not get filled at all the way until New York. Right here, it says at New York closing. Finally, I got touchdown at the end of New York session on Tuesday. So I got this trade in on Tuesday, and it goes against me right at the beginning of Wednesday. But I wasn't too worried about it because I know that they are going to be less risky if I go with Aussie New Zealand. And Wednesday or Tuesday, we did have a quite positive news for Australian dollar right here. Tuesday we have a Westpac consumer sentiment coming at 1.9%. Previously it was negative 4.8, but this was not the biggest catalyst. The biggest catalyst was the assistant governor Debel. He came out and gave a very hawkish talk, I should say he came out and gave a last dovish talk, and the market was really suspect Australian the RBA governor or assistant governor to come out and give a very dovish talk. Why? Because, like I say, Australia and New Zealand, these two countries are side by side geographically and also in terms of their trade. So whenever you have a very negative RBA, you most likely will have a very negative RBNZ and vice versa. So we now know the fact that we already have a very negative RBNZ. So a lot of traders thinking pattern is they try to speculate into shorting Australian dollar, as they're thinking that RBA will come out and give a very dovish talk, and that was not the case. The governor actually came out and gave a quite neutral talk. It's not hawkish, but it's neutral, and you can see the market already go ahead itself. They're trying to sell it, and then this is called selling rumor buying fact, or buying rumor selling fact, depending on the way you trade it. And then after the talk, Australian dollar shoots up and all the way goes to the uptrend this week, making another new high. And right now I'm still in this trade because this is my profit target at the blue line. This is my entry, and this is my stop loss. So you can see a quite nice risk-reward ratio trade. And again, I'm not too worried about holding this trade over the weekend. Right. Every time I'm holding the trade over the weekend, something that makes me nervous is when I'm holding something that's a risk of sentiment. Okay, because over the weekend it's where the market closes, and when the market closes, you cannot really do anything about it. And a lot of time, forgive my language, shit happen over the weekend. When shit happen over the weekend, traders are panic. When they panic, they will buy risk of sentiment. They either buy gold, they buy the US bond, or they buy Japanese yen and Swiss franc. So when you are in the trade that's shorting Japanese yen or Swiss franc over the weekend, that's where you have to be very careful. And I personally don't like to hold Japanese yen over the weekend because of that reason. So for Aussie New Zealand, I'm still in this trade, and I think it should come out next week, give me a win, because I haven't seen any risky catalyst for next week. But we do have a monetary policy minute from Australia on Monday. So it's actually Tuesday morning in the Asian session. So I'm not too worried about it. I'll see what happens. Worst case scenario is I will get out at break even. Okay, but I'm still hoping to see this high to get broken and then hit our price target. So that was a trade call for Tuesday. Okay, so let's moving on. Now, on Tuesday, I also, aside from Aussie New Zealand, I also gave out a few trade calls. I was asking people to go long on dollar yen, and let's take a look at that. Dollar yen. So April 9th, Tuesday, I gave people a trade call to go long our dollar yen, and this is right here. So as you can see, April 9th, it was not a successful trade call, because if you go to dollar yen long, you actually will get stop out. And as I said, this week is just a very very negative week for the US dollar currency. I do think in the medium term it was still going to the upside, but for now, for the intraday trader, you just have to tolerate. It's even like this. Even like back in March, beginning of March, we have such a strong downtrend in terms of intraday trade. But if you go to the daily chart and you zoom out, you are still in the uptrend, right, in a general direction. So you always have to understand what time frame are you trading, and you have to take that into consideration. So Tuesday, Aussie yen, my personal trade worked out well, but dollar yen, basically any dollar trade call I gave out end up losses. So I am sorry if any of you actually take US dollar, but you are in the right direction in a medium term, but not in the intraday trade. So how can you deal with it? Well, you can actually not trading a 5-minute chart. So maybe you want to trade US dollar, you know that it is a very bullish currency in the long term, then don't trade 5 minutes, don't even trade an hour. Go to like 4 hour, go to a daily chart to trade it because the fundamental is in your side. Okay, so Wednesday I gave out a trade call of Euro Aussie short. Now obviously because what happened Tuesday in the Aussie Newsy, I realized that Australian dollar is very strong. So on Wednesday, I want to buy more Australian dollar, and I pick Euro Aussie short as my trade call. Now, why do I short Euro? To be honest, I could have go with Aussie dollar long, and I did give out a trade call to go Aussie dollar long as an alternative. And if you have taken an Aussie dollar long, you would have made money more than me because I personally took Euro Aussie short and I have lost money. So April 10th, if you take Aussie dollar long, you would make money. It's right here. Now I took Euro Aussie short because I was more bearish in the euro, and the reason I'm more bearish in the euro is because ECB right now, from the previous meeting, was all very negative. They're very dovish in terms of their forward guidance. On top of that, if you take a look at the European market right now, they're not really. It's not really a bright picture. All the major countries, Germany, France, and Spain and Italy, are not doing that well. Okay, they're not in a recession yet, but they definitely are not as comparable to the U.S. or even Canada. Okay, that's one reason. The second reason is that the euro itself is also a risk of sentiment. So ever since 2015, when people start buying risk of sentiment currency such as Japanese yen, Swiss franc, they start buying euro as well. Now that could be because that we have a very unstable global market, and in the U.S., especially after the election, people are kind of scared with all this Russian probe, and you have the North Korean missile, which affect Japan directly. So people are actually feel more confident in terms of the eurozone, in terms of the geopolitical safety. So euro after 2015 become one of the safe haven currency, and when it's a safe haven currency, will always go up when the market goes down, right? When the stock market goes down, means people are panicked, nobody's investing, people are scared, and that's why they want to put their money in a safe haven currency or asset such as gold, such as US dollar bond, and euro become one of the choice. Now, because this week we have a quite strong risk on sentiment, means the stock market goes up, everything is so happy, everybody is positive. At this moment, nobody's buying euro, nobody's buying Japanese yen or Swiss franc. In fact, if you go to euro interest rate, a currency interest rate, you'll see that it is in the very bottom, right? It's 0%. It's just slightly better than these two negative interest rate. So it's at 0%. So nobody will buy euro unless it's a risk of sentiment. And since we are not in a risk of sentiment, so my thinking was that okay, we should have a very weak euro and very strong Aussie. Now, that was not the case. We saw a very strong euro all the way this week, and up till now, I still personally I cannot give you a reason of why euro was so strong this week. Like, to be honest, I don't know. Fundamentally, there was no news for the euro to go up. The only thing is we had the ECB meeting this week, and that actually was very negative, because if you take a look at euro dollar on Wednesday at around 8:30 a.m. Eastern Standard Time, you will see a huge drop in the euro dollar. Let me show you right now. And euro was actually hugely sold off during the ECB, but right here, right here, okay, I don't know if you guys can see it. Basically, that was 8:30 ECB meeting. We have a huge drop from 120, 112.79 or 113 all the way down to 112.36. This is a huge drop in comparison to the rest of the day or the week. A big movement. So it was a very, very weak euro, fundamentally speaking and sentimentally speaking. So I still don't know why euro becomes so strong this week. Now it could be many different reasons, right? The reason it could be that I read on the article that a lot of people are short euro, and basically a lot of big market movers are trying to squeeze the short sellers. So they're trying to basically stop out of the short sellers. Now when you're shorting certain things, you know that your stop is a buy stop. So when they hit your stop, means they are buying, they hit your buy order. And when they hit your buy order, one after another, you will have a lot of buying into the euro, which caused euro to shoot up. That was the only explanation I could give for the euro strength this week. But other than that, I was really puzzling, and I'm still quite puzzling to exactly why euro was so strong for this week. But nevertheless, that's what happened. So unfortunately, although Australian dollar was very strong, but euro was much stronger, and my Wednesday trade call was a loss. Okay, so let's moving on now. Thursday, which is April 10. So Thursday, what I did is I gave another. Oh, sorry, Wednesday. Wednesday, my. Oh, I apologize. Sorry, I gave out the Euro Aussie short on Thursday. Yeah, so Thursday was the reason. I remember because I wait after the ECB press conference to make sure the fundamental picture did not change, and it was very dovish. So on Thursday, I short Euro Aussie. But as I mentioned, I don't know why Euro Aussie, but Euro was very strong. But on Wednesday, I'm still very bullish on Australian dollar, and because of the risk on sentiment, I pick Aussie yen right here. So my trade call for Wednesday was Aussie yen. Now this was a winner for me, so I got in on April 10th right here. So I got in on about the end of here, I think. Somewhere here, I don't really remember exactly where I got in. I think somewhere here when it dropped. So I got in this trade call April 11th, April 10th on Wednesday because I was very strong, bullish on Aussie and bearish on Japanese yen. And this trade went up very nicely. Actually shoots way beyond my profit target. And we closed the week as a very strong Aussie. And again, so my thinking pattern to pick Aussie was not wrong, but I did not know why Euro was so strong as well. And that's the hardest thing about trading currencies, that you are not only gonna pick something as a winner or as a strong currency, you also have to pick the right loser, because it always comes as a pair. So sometimes you might be right in buying a certain currency, like me buying Aussie, but you might be wrong in the other currency that you're trying to pair up with. So for me, that was a loss for the Aussie yen trade, for the Euro Aussie trade on Thursday. Now on Friday, which was yesterday, before the market finish, I could put on another Aussie yen trade, but as I just mentioned to you, I generally don't like to get into a Japanese yen trade before the market close, because I don't want to stuck in a risk of sentiment and carried over the weekend, and only to be so nervous that something bad might happen over the weekend, and then which will cause gold, cause Japanese yen, Swiss franc to go up. So on Friday, although I do like Aussie, but I decide actually to try out New Zealand dollar short again, because I think, okay, New Zealand dollar, we had a very strong New Zealand at the beginning of the week, and my thinking pattern was that I think New Zealand dollar is weak fundamentally. We might have a good run for the week, for these 5 days, but before the weekend comes, before the market close, my thinking pattern is that the New Zealand buyers should have made their profit, so they should exit their trade before the weekend. So I was expecting a sell into New Zealand dollar because of the Friday. And I pick US dollar once again because US dollar is strong fundamentally. And as we are heading into a weekend, I think traders will want to put their money on the US dollar just to be safe because US dollar is also a safe haven currency. So I picked New Zealand dollar short again just to try out. And since I already knew how high it was for the week, so I actually put my stop loss at the high of the week, which is here on April 10th. And lo and behold, it actually breaks that stop. Actually made a new high and stopped me out. So it was really a bad trade for me to have two losses in the same currency pair. However, I was not honestly I was not too frustrated. The only time at where I am right now as a professional trader, the only time I get frustrated is when I don't trade with my discipline, when I don't enter the trade with a good analysis. Okay, if I trade everything with a clear analysis and a reason, then whatever happened at the end is not my calling. I wouldn't really linger too much on the win and loss as long as I know my approach is correct. But if I enter a trade just sort of like gambling, then even if I win, it's not a good win because you're giving yourself a very bad habit. If you enter the trade randomly and you're making money, you have to be very careful because very soon it will come back to catch you and it will burn you. And why am I so sure? Because that was exactly what happened to me. When I started my trading career, I didn't have too much knowledge. I had a very big risk appetite. I basically was gamble the market, and I made money, and I was very happy. I was actually on top of the world. I think, oh man, this is so easy. And lo and behold, it actually went back, and basically I lost everything that I have made previously. So you have to understand trading is a career, and you want to start out correct, right, and you want to give yourself a good habit. So this trade, on Thursday, after I look at the market, I say, hey, I might be right. New Zealand dollar is going down. We are heading into Friday. I think what's gonna happen is that the market, the person who was buying New Zealand dollar for the week is going to exit their trade before Friday and enjoy their profit, and people are going to buy US dollar and Japanese yen before market close to put their money in a risk of sentiment currencies. So we're heading to London station, and right here I got in. I was like, okay, we have a little bit reverse at a PV level. My stop loss was here, so I say, okay, I'm pretty sure this is gonna go down, and that was not the case. I got stop out. Okay, so I had about 3 losses and 2 winners for this week. But the good thing is that I have no regret. Again, because I enter everything in accordance to my analysis. But another thing is that I always enter the trade with a good risk-reward ratio. So even with a 3 loss, 2 wins, I might still come out as a winner. Like I already know that if my Aussie New Zealand trade exit next week with a profit, then I will be fine for this week. Okay, so that's why it's very important to always give yourself a good risk-reward ratio for any trade. If I have a trade that is less than 1-on-1, and then I'm really not interested to take those kind of trade. So always give yourself a good risk-reward ratio. Understand trading, you don't have to be right. You just have to make more money when you are right. Okay, so that's a quick recap for this week. I hope that gives you a good sample of what is the Toonie Webinar all about. If you join the webinar, that's pretty much what I'm going to do every day, Monday to Friday at 2 a.m. Eastern Standard Time, to give you a thorough analysis on what's about to happen in the London market and what are my trades. Now, how do you join the webinar? You go into NHOCO.com, Toonie Webinar. You can watch the instruction video, but I pretty much just tell you everything already. And you click the webinar you want to join. And if you want a New York update, you just put $1 here. Oh, actually, oh no. All right, I didn't do it. I didn't do it correctly. I'm gonna change it. So, what's happening is that you're gonna pick the webinar you want to join Monday, Tuesday, Wednesday, Thursday, and Friday, or you want an all five webinar. You just click this one, and then you put your email, you put your name, last name, and submit. Okay, there's no link for payment for now because I need to confirm with you whether I will be there for the webinar. Again, as I mentioned, I'm only doing this part time because I'm only trading part time as well. I have other things in life. I trade just sort of like a passive income for me, and so this is very good if you have a job, if you are stay-at-home mom, if you're a college student, you just want to try out the market. Definitely try out. It's $2 each. There's no upsell. It's actually nothing else to sell you. This is all I do, which is a daily webinar. Okay, so you click the day you want, you submit it, and I will contact you to give you the link for the $2 payment. And that's it. Very simple and straightforward. All the webinar will be conducted on the YouTube live stream. You will get a link which will be unlisted, but you can keep that link forever. So you get to keep the video forever. Okay, the video will be there for you to review over and over again. And during the 60 minutes, if you have any question, feel free to ask me. Now, if the 60 minutes is up and your questions are not answered, do not worry. I will make another video specifically for you to answer your questions. Okay, so I hope that's clear enough. However, if you have any question, please feel free to let me know. You can email me at here, my link, and my email address, my personal email address, and I will be able to respond to you. Alright, I hope you enjoy this video, and again, enjoy your beautiful weekend. I apologize for the audios because I'm actually right in the Starbucks drinking my coffee, which is more than $2. But anyway, I apologize for the audio quality if it's not good enough. Anyway, enjoy the weekend. I will see you on Monday, pre-London session. Bye bye.